Hey everyone, Tim here, and I'm back with another video. I did not die, I'm still here, I'm alive. I've just been super busy over the past year, but don't worry, I just need like 2 to 3 more months, and I'm making videos full time for you again. But yeah, I'm gonna dive right into it because basically today's topic is the 7 mistakes that most beginner traders make. And I wish I knew this when I first started. It would have saved me a lot of pain as well. So I'm gonna share it with you today. So hopefully you get a lot of value from this. So let's dive right into it. One is you wanna be a trader and not a gambler. Now, this sounds super obvious. In theory, it does. In action, it doesn't. I see it so many times with so many traders. What you need to know is that traders know that there's no way you can win 100% of the time. Most traders or people who are just entering the stock markets now, they trade and they make trades as if every single one's winning. There's no risk management. They'll buy somewhere, but buying is the easy part, right? You just click the button, you buy, but where are you gonna sell? Where are you gonna, manage your risk if the trade goes against you and it doesn't go up as you anticipated? What do you do in those situations? So super important that you act like a trader and not a gambler. So that's gonna take us to our next step, which is number 2, not creating a portfolio management plan. So the purpose of most people's management plans is minimize your risk and maximize your profit. So how do you do that? Well, it's gonna come down to the next 5 steps, which is 1, not knowing what to buy, when to sell, how much to buy of something, and lastly, tracking your trades to make sure that your trading strategy is complete, you have a solid plan, and you have something to work towards and improve on every single day. Number 3 is deciding what to buy. In order to do that, you need to first figure out what type of trader you are first. Are you a trader? Are you a speculator? Are you a long-term investor? These are all things you need to ask yourself before you even enter the stock market. Sometimes I see people who are looking to build towards retirement, but they're going in, they're making trades every single day, every week, and it's that's the wrong strategy and approach if you're trying to do something long-term, or vice versa. So really figure out what your goals are and then work backwards from that. And so in order to figure out what to buy, you need to create what's called a watch list. So a watch list is basically inside one of your trading platforms that you use. And even if you don't use a trading platform, even on the Apple iPhone app, you can create a list of stocks that you can use. Building your watch list of stocks that you like to, maybe you hear about these stocks all the time, maybe you use these products, you know these companies, you're familiar with them, and you really believe in them and what they're doing. Whatever it is that your trading strategy is, it could be based on technical analysis, it could be fundamental analysis. You know these companies you hear about all the time, and you want to start building a watch list of these stocks so that you can track them every single day, every single week, and then that's your starting point, right? Once you build up, a list of 10, 15, 20 stocks you're comfortable with, then from there you can look to now analyze them based on your trading strategy to figure out which one you want to buy. Lesson number 4, figuring out when to buy. Now that you've created your watch list, you know what you want to buy. Well, when do you buy it? So this comes down again to your trading strategy and what you want to do. You could go watch YouTube videos on technical analysis, learn about technical analysis. That's what we teach here at Stock Navigators. We have a full-on course on technical analysis. Some other people prefer to use fundamental analysis, where you look at a company's net profit, you look at their revenue, you look at their growth, who's on their management team. So that could be another approach that you use as well if that's a method that you prefer. It doesn't matter what stock you're buying, because if you don't know when to buy it and you're buying at the tip and every time you buy it goes down, then that's not good. So you want to buy, you've heard the saying before, buy at the dip, right? When the stock comes out, and you want to sell at the tip. But when is the dip? Right? How do you know what's actually a dip versus a correction and things like that? So all of these things you have to go learn and spend a lot of time studying how technical analysis works, how the dips work, how the markets move, and it takes time. It's not a quick process, but once you understand that, then you'll be able to buy stocks at a much more affordable price when they're dipping, or ideally at the bottom of that dip before it goes back up again, versus blindly buying some stock at X dollar, but you don't even know what X dollar means, right? If you bought a stock at $100, well, is it gonna go up to 150? Is it gonna go down to $70, right? What does that even mean? Have a good trading strategy, essentially, so that you can understand when to buy. So the next thing on the list, number 5, is deciding how much to buy. This is super important, right? If you have $10,000 in your account and you threw it all to, doggy coin, well, I mean, technically if you did that, you'd be a millionaire by now. But let's say you threw $10,000 all into one stock or one coin, you name it, and it goes down 50%. That's half of your bankroll or trading account literally gone. Whatever amount you have in your account, you want to be smart with it, right? Don't just throw it all in one or two stocks. Really decide. Like, let's say you had $10,000 in your account. I would put that over maybe like 4 or 5 or 6 different stocks, right? Diversify it a little bit. Obviously it's easier to diversify if you have a bigger account. Like, for example, if your trading account's $100,000 or even $1 million, right? You can have 15, 20 plus stocks in your portfolio. Obviously, I understand if you only have 5 to 10,000 in your account, it's a lot tougher to diversify, but still, you don't want it all in just one stock or one coin. So be smart with it, do the math, figure out what is reasonable for your account. Again, just to give you rough numbers, if you have anywhere from $5 to $10,000 in your account, maybe I would own 5 to 10 stocks. And obviously, if you have more, like $100,000 account, you could have up to like 15, 20 stocks. So that's kind of like the rule of thumb to manage your risk. And again, all of this is really contingent on your trading style, what your goals are. Are you looking to build towards retirement? Are you looking to make monthly income or yearly income, looking to swing trade for a couple years and just make quicker profits? Whatever it is, if you know that, then you'll be able to figure out how much you want to buy of certain stocks. Number 6, deciding when to sell. So I see tons of people entering the markets, especially recently in a bull market, and they'll buy blindly, and everything obviously goes up in a bull market, right? So everyone looks like a genius. But what do you do when the stock starts to drop, right? What do you do when the markets crash? How do you actually know when to sell that stock you bought? Again, this goes back to, I believe, number 3, which is deciding what to buy, which is having that trading strategy. If your trading strategy that you're using to invest in the markets doesn't tell you when to sell, then either you need a new strategy or you need to beef up your current one and figure out when you want to sell. And again, it depends, right? If you're trying to build a long-term retirement account, obviously you're gonna buy and hold for 20 plus years, right? 10 plus years, you name it. But if you're looking to make money, every few years and swing trade, or maybe even every few months, then you definitely need a more detailed, granular approach to your trading strategy. Usually if you're trading in much shorter time frames, most people I know use technical analysis, and you need a very robust one in order to capitalize off these short-term swings, whether it's up, whether it's down, and really make the most out of the markets. So number 7, last but not least, is tracking your performance. So again, most people get into trading and investing, and again, they don't have that trading strategy in order to do all of these things that we talked about, but they're not tracking what they're doing on a daily, weekly, monthly basis. Most people don't want to spend that extra 15 minutes a day to have a trading journal, right? It could be a handwritten journal, it could be an Excel sheet, whatever it is that's your personal preference. You need to track your trades, or else you're not gonna know what mistakes you're gonna make as a trader. Most of the time, you're gonna see these mistakes happen because of human psychology. You get excited about a stock, you buy at the top, even though you had this great trading plan, but you have FOMO, or your friend is telling you X, Y, and Z, Susie. Susie always gets us. We're eating pizza, Susie's like, hey, get in the stock right now. Next thing you know, all our money's in the stock, right? Whatever it is, if you have your own Susie, make sure that you don't just rely on her, or it could be him as well. Whoever your friend is that's always in your ear telling you all these different stocks, make sure you have a trading journal so that you can just listen to yourself and you can say, okay, why did I buy X stock in March? And how did it do based on that criteria? Why did I buy this stock in April? And how has it done so far over the past few months? Why is it done well? Why is this one not done well? And C, is it because of a human error? Is it because of your trading strategy? Whatever it is, you need to have a trading journal and track it. I'm telling you, this will completely change your trading. It did for me, but again, it's just annoying. It's just one of those things that you're like, I don't need it. Like, I remember in my head, I'll just, look at my portfolio every day and I'll memorize it, whatever it is, but trust me, it's not the same. Yeah, basically, these are the 7 things that encompass what I've seen where most beginner traders make their mistakes. And again, really it ties back down to 2 things you're gonna see, which is again, at the highest level, having a good trading strategy. Because if you do have one, It's gonna tell you when to buy, when to sell, and all of these different things. And the next thing is human psychology and tracking your performance, because this part's great and all, but you're gonna see you can be super smart, but you'll still make tons of mistakes, and that's just, humans. So hopefully this video was super helpful to you. Again, I'm gonna be back soon, so bear with me. I'm getting a full-time videographer to live in with me, so I can't make any excuses. They're literally gonna film me like before I even wake up. Sounds kind of creepy, I know, but you gotta do what you gotta do. But yeah, over the past year, I've been super busy. I have so much in store for you, so can't wait to see you in the next video. Thanks again, Tim, clocking out.